All right, let's have a look at the aggressive entries. So again, the aggressive entries consist of all the formations that you have learned so far. Again, double tops, double bottoms, MSS, break and retest. And again, at the end, it all comes to simple market structure. It's all about identifying higher highs, higher lows, and lower highs. That's it. Nothing more, okay? But just the formations kind of help us visualize how the market is moving and really to ingrain those patterns in our minds, all right? So the difference between the conservative and aggressive entries is that this time we're going to be using either instant execution or limit orders. Remember with the conservative entries, we're using stop orders, but right now we're going to be using limit orders. So I really hope you are aware of the difference, and I'm going to provide you with more examples. And actually I can record a little video after this, or even I can put it before that to explain the difference between stop orders and limit orders so that you actually can eliminate all the potential confusion. So yes, I'm going to do that, but let's have a look first at the aggressive entries, and it's actually going to make perfect sense to you. So as the market breaks and closes above structure, your aim is to identify an entry area. So in order to take an aggressive entry, you need to have some sort of broken structure and need to have some sort of a level that you're looking to place your order. Okay, so this is important. Usually it is the last broken structure that is clear and it can provide a potential BRS formation. So if you remember what I said before on the conservative entries, sometimes you don't get that perfect break. Sometimes it's just one little candle, then one can stay just above, and then the next one is actually gonna start creating the higher low formation or the lower high respectively. But with this one, you need a clear, nice break and a potential BRS formation. Okay, and stop loss of course is always below the lowest point of the previous structure, because with this we don't use conservative, we don't use stop orders, but you always want to keep your stop loss as safe as possible, so always below the previous structure. Okay, and in order to place an aggressive entry, you have to be super confident that the structure is really broken strongly with strong momentum. If you see a weak break, like we had an example, let me just go back. Yeah, this is not really a strong break. It is a strong break because it's a beautiful body close, but it didn't come further from this level, because usually you would like to set a limit on this zone. So if it came around right there, definitely you can set it. Okay, so if your break is not really significant, it doesn't really pull away from that structure, then you should be using a conservative entry. So this is why I told you that you're constantly going to be switching through conservative and aggressive. All right. So again, a few details. Not always price will tag you in. Sometimes it will just run away without tagging you in, just continue to push, and that is fine. Did you lose money? No, you didn't. Why do you care then? Don't go FOMO and don't try to chase the trade. That is when all emotions are going to start kicking in, right? And of course, sometimes it will also quickly hit your stop loss. Should you take the trade again? Not at all, because you just had a stop loss. You were wrong, and I am wrong a lot of the times. I'm actually having a 45 to 50% win rates, and that is perfectly fine. You are gonna have losses, okay? So that's the disadvantage of the aggressive entries, is that you are gonna have less confirmation than the conservative entry. You're gonna set a limit and forget, okay? And you don't know if that is actually gonna work out or not, but this is part of trading. We never know what's gonna happen. The advantage though is that this approach is more set and forget. It will most of the times provide you with a tighter stop loss, which will on the other hand result in a bigger R&R. So if everything of that is clear, make sure to again digest it. Let's have a look at some examples. I have prepared a lot for you right there. For example, let me use my favorite blackboard right there. A blackboard, whiteboard, bro. What are you talking about? All right, so right there, what do we have? Again, let's analyze structure. Lower high formation, little bit of a double bottom. Do we actually broke this major structure? No. Lower low, lower high, lower low right there. And what do we have right there is this break. This beautiful push to the upside that broke structure. So again, some of you might say right now, we had that break and the market already retested. That is fine. You can take an entry from here. That is fine. But have a look at the pattern. Have a look how the market pulls away, stays above, comes back for a retest, and then goes. And actually during my weekly outlook and setups, I'm always telling you this. If you have spotted so far a break, I want to see a clear break, a stay above, kind of for the market to really round up a little bit, not just a break and a retest like this, but for the market to really confirm that it's holding something like this, and then to potentially retest. Actually have a look, the retest is right there with this wick, and then to potentially go. Okay, So this is an aggressive entry. Why is it an aggressive? Because we don't wait for any candle confirmations right there. Okay. Could you have done candle confirmation? Absolutely. Bullish engulfing candle right there. Beautiful rejection candle right there for a potential stop order above. So you could have been triggered with this candle right there. And maybe you could have kept your stop loss right there, which could have actually, this example, reduced the stop loss. But again, it's all about what you like. We had the market shift. We had a new high. This structure was broken. This structure was broken. And even this structure was broken right there. Retest of the most recent structure. That is right there. This is our major lower high. So because this is our lower low. Then the market stays below, but then it breaks. And then we retest and then we go. So really hope that is clear. This is our first and pretty simple example.